Hello, good morning, everybody. Ryan, is your microphone on?
Hello, hello. Can you not hear me?
There we are. Good morning,
Ah,
Ryan.
there we go. Oh, I was sitting there speaking to myself. Well,
Yeah,
I'll just repeat.
I thought
Good
you.
morning, everybody.
I thought you decided nothing was going on today, and we were just going to have like your calendar screen on for a while. Shooting.
No, so I was saying, I think it's Thursday today. These days and weeks are flying past, and lots going on, obviously. So, good morning to everybody. Welcome to the Flow Show. Thanks for coming, and good morning, Kay.
Good morning, Ryan.
We shall start now. Right, as usual, these days, lots to speak about, lots of price moves, lots of geopolitics going on. So let's just crunch through some of the fundamental stuff that we saw yesterday. Not a lot out really, but we did have the big ISM, which came in perhaps surprisingly to the upside in the headline number at least. But what was possibly a bit destructive, let's call it, was the employment index of the ISM services going into contraction at 47.4. This plays right into the Fed's playbook, Powell's playbook of wanting to take some of the steam out of the jobs market. We've been debating in the room and here and elsewhere whether we're going to start to see that coming through in the NFP numbers. As you know, the NFP can be a bit of a lottery. It can come in just as easily up 400k as it can come in down 200k. The trend has been strong, though. It has been a strong jobs market. We've seen that the PMIs starting to weaken in the job set numbers, the employment numbers. That could mean we're potentially coming towards a set of soft numbers. We discussed this on Face yesterday. I'm not sure whether it kicks in this month or whether we might see it kicking in another couple of months. But if these numbers do persist in things like the PMIs, jobless claims we've watched continuing to just take an upward path, it's going to likely build into the headline jobs numbers that we're going to see. So when, who knows, but don't be surprised if we do start to see the NFP numbers dropping off, tailing back, maybe even turning negative at some point. So that's just something to keep an eye on going forward. Jolts openings came out, still very strong. These are vacancies. The quits number, which is a number I look at to see if people are leaving work to potentially move up the jobs ladder, they were still fairly strong. So this data is lagging by a month. It's May data. So potentially we might again start to see some changes in the next couple of reports, but it still gives an indication that there are still plenty of vacancies out there. And so there shouldn't be a need for too many people to stay unemployed if there's that many vacancies out there. But it's been a theme we've seen between things like the non-farm payrolls and the vacancies. There seems to be a big gap between people going into work and there still being vacancies. Obviously, one thing to look at from the NFP tomorrow will be the participation rate. That's important as it shows how many people are coming in and out of the labour market, whether they've got work or not, because that can affect the unemployment rate. But we'll have all the cheat sheet numbers up for the NFP tomorrow. But moving on to some of the other things, we got the FOMC minutes out as well last night. As expected, no real changes or anything of note to pick up from that. Sticking to the same script, going to continue with hikes. There was only one person who didn't vote for 75 pips at the last meeting. And the usual waffle about data watching, expecting inflation to pull back, so on and so on and so on. So nothing really in there that stood out. Quick look at today's stuff because we've got a few bits and pieces out. Oh, let's get the right page. There we go. Just having a look through what we had out. Not a lot in some minorish data out of Japan. Didn't look too hot. Leading index there. And I know Kay is going to talk about some bits and pieces out of Japan. We've had some potential stuff about changing forecasts. I know Kay will step into that in a moment. But for today, really the data, we've got the ADP and challenger jobs coming up. The ADP is always looked at as a precursor for the NFP. You know, if we get a dodgy one there, then that sets expectations changing for the NFP. Challenger jobs there. Again, this is a smaller number, but it gives an indication of firms who are looking to lay off workers. Doesn't mean they actually lay off that exact amount, but when you hear things in the news like Tesla announces a cut of 1,000 workers in XYZ state or factory, this is the sort of number that it shows up in. So it can give an indication if firms are looking at large-scale layoffs. Obviously, that can impact the jobs market moving forward. Jobless claims data to keep an eye on. But really, that's going to be it until we get to the NFP tomorrow. So before we get into the headlines, Kay, just wanted to you looked at the Japanese stuff that came out not too long ago. Anything important there?
Yeah, overnight. It's a little bit a global fact. Bank of Japan is expected to lower its growth forecast, but up its inflation forecast. It's a little bit of a global thing. So we do have the Bank of Japan meeting coming up in less than 2 weeks now. There are going to be the new economic forecasts in there, so that's what the market is expecting, or at least BOJ watchers are expecting them to lower their growth forecast, but up the inflation forecast. Now, the Bank of Japan already put forward their JGB plans for the next 3 months, and they absolutely did not change anything, nor amounts, nor the frequency. So changing monetary policy might be a big ask. But then, and Kuroda already said that they had to continue with their current easing. And if we look at the last BOJ meeting, there were absolutely no dissenters to go like, no, we have to change something, right? So they didn't even discuss changing monetary policy. It might be that they start to discuss what they could do, because it would be like a shame not to do anything, because that's my personal opinion, because their window is wide open, but could close very, very quickly. But as things stand, as they already have their schedule for the JGB buying, continuing to block that 10-year JGB yield from going above 25 BPs. It would come as a surprise if they really change anything at the next meeting. So yeah, it came out, and that's it basically. We will be looking at the currencies probably a bit later, but dollar yen is close to a reasonable level there again, in my opinion, 136.2025. Other thing I saw in the news, which again is something that's going on in Europe, is that we had the French Finance Minister Le Maire coming out in the FT saying that the EU debt rules are obsolete, and in the light of the pandemic, they should be looking at a new economic model, meaning that the debt rules for EU member states are, in his opinion, or in France's opinion, which likely will have a lot of ears in the south of Europe, are needed to be changed. That comes after Lindner said earlier, well, I think it was in May or so, he said something about that the EU need to become tougher, not softer on public debt. So if you look at it from a standpoint that of how it's going to go with all those debt rules and budget rules and per extension, look at the fragmentation tool, where already the core Europe or the north of Europe is not agreeing with the south of Europe, and now France seemingly sliding more and more into the southern part rhetoric. I think it's an extra weight, if needed, around Europe, the euro's shoulders. It doesn't bode well for any agreements to be made on important stuff. That's my opinion. And the other couple of things I noticed overnight is the much better than expected Australian trade balance, and that's in today's market, it's pretty exceptional, especially after we've seen the German trade balance come off or negative for the first time in 30 years. We see regularly the Japanese, for instance, trade balance being negative these days as well. So I think it was worth noting. It might be a one-off, but both exports and imports were on the rise. The trade balance was very positive. And we've seen a bit of a response there in the Aussie dollar as well, moving away from that 50% retracement of the 2021 area or range, and which is around 67, 50, 60. And we are now trading above a small resistance here. We're trading up in the 68.40s right now. And the last thing of note is that, in my opinion, the German industrial production numbers came out slightly positive, but they are not behaving very well. The prior one has been revised, but we don't see it on the calendar here. But the year-on-year came out quite negative. So I'd say still not a positive for the euro, in my opinion.
Yeah. And we also got, we're getting some headlines out of Japan as well, particularly Tokyo, to do with COVID. Cases are rising there, and they may look at further restrictions or tightening restrictions. So that's potentially another something to look at for yen anyway. And the other headline was this China 220 billion in stimulus. Apparently they're looking to do. This was a Bloomberg sources piece, so take with a large pinch of salt, as we do. That did give Aussie a lift, gave CNH a lift as well. Not huge. This 220 billion that stimulus that they're basically going to allow local governments to sell bonds to raise money for infrastructure spending, which, as we've known previously from several weeks ago, this was something that China was going to look at to, boost demand. What it does, it tends to give a good boost to activity, and you can, raise GDP on something like that. But infrastructure spending is finite. So, after you've finished building what you need to build, then you can have a bit of a drop off because you've stopped and activity grinds to a halt. But when you get these big headlines out of China, look at the Aussie dollar, look at CNH, obviously, and your commodity currencies, because this type of news is what gives commodity currencies a lift. Whether it's enough to break the run that they've been on and halt the slides and turn everything around, I don't know. But, these things always start somewhere.
Yeah. At least.
Right, so just before we move on to some of the prices, just looking at some of the comments. Nick, I thought the downgrades in growth and GDP were overlooked in yesterday's FOMC. These were the minutes, Nick, so it's just basically a reflection of what we got from the statement. So I'm not sure they were overlooked, but it's just an after event thing. So we knew what was coming. Adam Quitter, I was calling for Boris's resignation a couple months ago. Yeah, I'm not going to claim being a soothsayer for that one. I said after the no confidence vote, despite him winning, it's still a matter of time before he goes. And I actually said at the beginning of the week, I'll be surprised if he lasted a week after what's been going on. And so in effect, he's gone. Obviously, that's been the big news this morning. We had loads more MPs and ministers and aides and whatnot quitting. I think we're up to 53 by the time the news dropped that he was going to quit himself. The pound did jump, no denying that, but we're not talking rocketing to the moon anywhere. I'm just keeping an eye on euro sterling because I fancy picking up a bit into the big figure down here. So excuse me if I pause to have a little trade in a moment. But yeah, is this huge news for the pound? I don't think so. I think what we're probably seeing is a bit of tiredness after the drops that we've seen both here and elsewhere, Aussie dollar, euro dollar, that sort of thing. What has been key here is knowing what's going to come next. And now we're into that position where we're getting all the players stepping up, who's going to put their hat in the ring to become leader. And so potentially the market may start to take a bit of attention to that to see who comes in. Does it mean wholesale changes to government policy? Are these people pro-business, pro-tax cuts, that sort of thing? It's all about what the new leader's likely to be. There are some front runners emerging. Steve Baker's thrown his hat into the wing, and I think Javid's put his name up as well. But what's going to happen now is that Boris said he'll resign. He wants to stay on until October, pretty much the next parliamentary session. Now, they all go off on recess 21st of July, I think, until the 5th of September. So Parliament will actively be shut for 7, nearly 8 weeks. But Boris wants to stay on, apparently. No one wants him to stay on. They want to put in an interim PM or fluff their way through till they can put in a proper leader. That might create a bit more uncertainty for the pound, because effectively you need a running government. At the moment, it's looking like we won't have a running government here in the UK, and that means policy won't get passed and everything goes on the back burner. So there's still a bit of uncertainty in the mix here. So I certainly won't be buying the pound just because Boris has resigned. In the same way that I wouldn't look to sell it on rumours that he was going to resign or the political mess. But we have seen, as I say, we've seen some moves, and euro sterling is probably the main mover, reflecting the pound rather than the general stuff that's been going on in the dollar pairs. As you can see, it's a bit weaker now. I feel like Groundhog Day showing this chart sometimes, because it's been pretty tight for weeks. Between this 85, 84, 80 and the 86s up to 87s. But these are levels I'm potentially looking to trade. If we see a move maybe down to the big figure, maybe through it, I might scale in just some small scalps, if you like, just to play on a short-term trade, just to trade the levels. But if it does move back higher, then I'll try and keep some on board and put that into my core longs, which I'm long an average of 83.50 at the moment, and running that. What I am keeping an eye on, though, with this position in particular, is the swap costs, because they are creeping higher. That's obviously the big rate divergence going on now. Hopefully that'll narrow some when the ECB finally start raising, but it's not becoming too impactful to my positions, but it is something I do keep an eye on. If it grows into a large percent, what it can mean is that I get out of any positions or take more profit and look to get back in on the break. So as I've been saying, a potential break of the 87 area would be somewhere where I'll add to the trade. But if we stay in a bit of a range, I might cut a lot of the position and then get back in if I feel that the time's right to move. But that's also the reason why I'm looking to play this one as a short-term trade, as well as putting some in the bank, because if I make some pips on the short term, that'll cover some of the funding costs in the longer-term position, the core position. So that's just a bit of money management there. And just Anne made a good point. Sorry, going back to Japan, we do have the upper house election on Sunday. We noted this a couple of weeks ago. It's completely fallen from my mind with everything else going on. Kay, you expect any big news out of that one? I don't think there's going to be any upset for the ruling mob.
I don't recall whether it was Face or even yesterday we spoke about it on our Flow show, but The issue in Japan is is that even if the people would want to make a change, the opposition is so scattered about that there is very little possibilities for them to bring forward a clear unified or how shall I say a clear leader to stand up against the current LDP. I think there's uh, uh, well, let me see. I think it's 125 seats or so, and up for grabs because they re-elect half of the seats every 3 or 4 years. And if I recall well, there's only 10 or 11 constituencies where the opposition groups are putting a single united candidate forward. So the chances of beating the LDP party are extremely slim. So even though if there's discontent about the current situation, which there is clearly, because people are not used to see higher prices in Japan, rather on the contrary, and real wages are still not going higher, on the contrary as well. It's going to be difficult for anyone to really stand up and challenge the LDP. So rather than a big change, a change would be a very big surprise. But rather than a big change, I'd say after Sunday is going to be business as usual.
So just taking it slightly off topic, but keeping it on the political side, what type of thing would indicate a real change in voters' minds? Like here in the UK, if we have problems, we can have a by-election, and that can be where the voters can use the situation to show their dismay, like we got with the two UK by-elections, Tiverton and Wakefield, which changed from Conservative. And the numbers in those, the vote counts were very low, turnout was very low, like 50%, with some of the parties who won those seats won with less numbers than they did when they lost to the Conservatives originally. That gives us here in the UK an indication of how voters are feeling. What do they have in Japan that can indicate a turn in mood?
I think it would be, but the issue is the opposition is so fragmented, and so what they need over there is really somebody like CDP, but they are not strong enough. But the old DPJ, which is now CDP, and which actually fragmented themselves, so they couldn't even win an election yet against the LDP, and then they fragmented themselves. So I think really it's a question of probably the somebody young coming around, having like fresh ideas. Not the type, but the age group, let's say, like a type of Macron in France, who speaks to the youth and unifies them behind them to really go and challenge the big blocs, because we cannot forget Japan's demographics, right? If you like if you like the LDP, have all the 50-plussers behind you, who is going to beat you in the numbers? So there's that problem as well in Japan. And let's not forget that the LDP has been putting stimulus plan after stimulus package in place as well, since especially accelerated and ongoing since the big quake 11 years ago. So there is a big part of the corporate Japan who will vote for stimulus packages, of course. So I can't see right here and now, I say, unless there is a new messiah standing up and rallying the whole youth behind them, and at the same time getting corporate Japan behind him or her. how things will really change quickly in Japan.
I guess what I'm looking at is for this one is, you know, if people wanted, let's call it protest vote, if people wanted to protest vote with the situation in Japan now, they wouldn't really protest vote by voting for other parties, but could they show that sort of protest by not voting at all, and then we see sort of a lower turnout, or is that just not in the Japanese makeup to do that?
Yeah, I think the turnout has weakened over the past already, but I'm really having to think hard if the votes in Japan are mandatory or not. I wouldn't.
Yeah. Okay.
So,
I'm just trying to think. You know, once we get the
I see
detail.
what you mean. No, there was actually some chance at some stage, 3 or 4 years ago, when the Tokyo governor Keiko stood up and she was looking pretty strong because she had a lot of the Tokyo votes. But then the problem was that she couldn't find any agreement with any of the other opposition parties to really stand up to them. So yeah, it's gonna be, yeah, you're right, of course. But it's just a system of the person who has the most votes for a seat gets the seat. So whether you got 2 versus 1 or 200,000 versus 100,000 is likely not going to make the difference. But yeah, I mean,
cool. Okay, well, let's move on. We'll look at dollar yen as it's there. For me, still going a bit sideways. Probably putting in the longest period of consolidation we've seen in quite a while. You know, we could probably match it off against the times we were around the 130s. You know, we had the big move up, then a little bit of sideways. It's a pretty similar play going on here, albeit a bit tighter at the moment. So it could be coiling for another move. But the levels are starting to show up again. You know, this 136.30 area, you know, it was a bit of an on-off level. So it's one of those ones you keep an eye on. If we're holding below, it keeps the downside, the near-term downside in play. If we get above, then maybe we're having a look up at the highs again. I took a little short in this one yesterday, just on the back of the move over the data. The ISM, as I mentioned, on looking at the calendar, it was quite strong, and what we saw was pretty much a complete turnaround in US yields. I mean, you know, things were looking really sucky yesterday, and here we are this morning, you know, ramping up to near 3% again. Now that really all started around the time of, well, actually started a little bit before, but the ISM I think added a bit of extra wind to that, because
is that
on the fundamental side, it showed that, you know, we saw weaker manufacturing, but services are holding up well. So, you know, the US isn't on the map just yet. Go on, Kay.
Yeah, the S&P Global PMI revision to the top side already scared a couple of bond traders off. It's really, if I just may add my 2 cents there, it's really incredible how yields, including 10-year and beyond, can move 15, 20 BPs inside one session. Those are big moves, because you can't forget how many trillions of dollars depend on moves like that. It's big, and as I've been saying before, I've been reading, like, even the professional bond traders in banks and asset managers are saying, like, they haven't seen anything like it. So it's really messing about with a lot of portfolios. So that's where we see those swings come about. And yesterday, as you were saying, like, dollar yen was looking to break below 135, and the US 10s were looking to break below 275, 280, and it only needed like one revision of the PMI to shy away from the levels, and then the ISM came on and ramped dollar yen another 70 points higher. It's I find it a little bit strange, actually, and I wanted to ask you to see if you have a different view on that, because if you look at those ISM data yesterday, Ryan, you have a better ISM global number. You have Let me try. You have a better global number, then the business activity is a little bit higher. But then if you look at all the rest of the components, employment, prices, they were all
So,
lower. So I didn't really
yeah,
understand
I
a
know
lot
what
of
you
that
mean.
number.
Yeah, I know what you mean. Let me get it up. Where is it? There we go. I keep all these reports. Yeah, it can be a bit funky sometimes where the headline comes in, looking good, and then you read the details and it all looks, and you think, well, everything else is down, so how can it be, a better number on the headline?
Exactly.
I think it's a case of, yeah, people look at the headline. I mean, new orders dropped down 2 points. I think employment was the big one. But when you look at things like supply deliveries and inventories dropping down as well, you know, you wonder why it's ramping higher. Imports going into contraction, export orders down. Everything you look at and you think, well, backlogs are still building. So there's still things in there that say there's issues, supply chain issues, demand issues, moving goods issues. But sometimes the market just, sees, and the algos just sees the headline number, see it's better, and think, well, the manufacturing was worse. This one's not, and it perhaps is been looking for a reason to buy back in and sell off in bonds and get yields higher and the dollar to ramp higher. To me, it's brilliant because if I'm happy to get 70, 80 pip moves on data each time because now it gives us something to trade. Exactly what I did. We got an 80 pip odd jump in dollar yen up to this 136. I thought, right, I'm going to have a little short up there. Managed it down to 68, I think was my lowest cut. And I'm out on the trailing stop at 15 this morning. So I've got a few pips in the bin, but I don't think we've been able to trade data and get this sort of vol for years. Not even around the times of coming out of the financial crisis and banking crisis and all that stuff, in 2015, 16, when, we had all this stuff going on at central banks going from dovish to hawkish, the Fed going on their hike cycle, taper tantrums and all that sort of stuff. Even back then, the data wasn't moving a lot. It bodes well for tomorrow's NFP, I think. If we get a big variation there, we could be back to seeing 100 pip moves on the NFP, and that'll be juicy. But we'll have a chat about the NFP tomorrow and how I look at setting up trading, those sort of numbers, because it can be a bit difficult to react right on as the announcement comes out. As a manual trader, I could do it when I was on the live floor, when it was me versus everyone other human in the pit. But now, the price has gone before you can even get your mouse clicking. So for me, trading something like the NFP becomes looking for stretch points where a move is going to run into trouble, and then trying to maybe counter trade that, or indeed if the market's got it wrong, or it's not moved enough, going with a second win move, something like that. But we'll talk about trading the NFP tomorrow. But yeah, I think it's great that we're going to see big moves on data. It's what we want. And speaking of data, I just wanted to check something. I don't know if you guys and girls, I had we had the ADP up this week on one of my calendars, but I can't see it anywhere else.
Today.
Have you got it on your calendar?
Yeah, okay. Today. It should be up today because since there was a holiday on Monday, that number is a day delayed, so it should come out today.
Yeah, I can't see it on any calendar.
Oh, really? It's on the investor calendar. Let me see on the other one.
Past one, it should be.
I've got another one. Oh, hang on.
I can't see it on Reuters, and I've asked the guys; they can't see it on Bloomberg.
Okay, I don't have it on another calendar either. So, is it one of those mystery numbers?
Yeah. So it's not.
It should be in theory. It should, in theory, be out today because
past one.
Because they had a holiday on Monday, but yeah, you're right. It's disappeared from my calendar as well. Yeah. I had to refresh.
Yeah, I've just had confirmation from someone that it will be released today, but just strange. It's not, okay. Investing's a good calendar, but you wouldn't bet the farm on its accuracy. But I've checked Reuters and someone's checked Bloomberg, and it's not on there either. So, just in case you're looking at your calendars for the data coming up, it looks like we've got the ADP at 12:15 GMT. So, as I say, keep an eye on that. I'd like to check what the expectations are, but I can't because I can't see it anywhere. Anyway, just keep that in the diary. Thanks, Anne. Has it got it on there? Has it? I'll have a look at that link. Right. So anyway, back to the prices. Cable. We've just had a look at before. What are we going to say about this one? Here we are at the big 120. This probably could be the decider today, what it's going to do. We're pushing above it now. Is it going to hold back above 120? If it does, that's going to solidify the support down here. In my opinion, we've got signs again. We keep getting these little breakthroughs. It keeps happening time and time again. Let's look at a longer term chart. We get all these little moves through, and that's probably a bit of the market being too complacent about a big figure, or retail traders being too complacent about a big figure. And the market likes to go and take the stops out below before reversing. But as you can see, going back in time, it doesn't stay below 120 for long. Take out the this COVID move here. Didn't even really get under there over the Brexit stuff. So this could be another sign that this one is going to head back higher. I'm not inclined to step in just yet. That probably is being said. It'll probably rip to 121 late in about another hour. But I want to, we've got some supportive action going on now. We had a low, made a new low, but then we found, support coming in again on the first low, and just that support is stepping up. So from here, if we can hold this 120, then we could potentially be moving back up into the range. But I would be worried about this being a bit of a fake out and a bit of a dead cat bounce, perhaps. Even though we've come a long way, and really the same could be said for euro dollar. Big old move that we had down from 104s and took all the way through the big level. So we've got some small steps in the way. I'm still short this one from the 103.40 break. I did nick off some near the lows here, and I took some off at 101.95 about an hour ago, just because it felt a bit more supportive this morning than it has done yesterday, at least. And as we can see, we had a move back above 102, back down, test the support around this 60-70 area, held, we're back up. So this is what I do when you try to pick bottoms. You want to try and pick bottoms. You look for this sort of price action. See where the support comes in. See how long it's going to last for. Gives you a bit more conviction. You wait here. It didn't happen. It broke back down. The same thing here. Is it going to hold up? Well, the first step will be getting back above this breakdown area. Get above there. This is going to solidify the support down here. Give you a bit more conviction. Again, I'm not ready to turn tail into longs. I've got the stop on my short at 102.50. So that's the sort of area I'm looking at to change his trend. And I'm sorry about all that beeping going on. Kay, you got any thoughts on cable or the euro dollar here? Hello. I think your mic's off.
Oh, sorry about that. Yeah, euro dollar. I'm still in the sell rallies camp. I'm short a couple of euro crosses still. Euro Canada, Euro Mex. I have my confidence levels in the euro are still very low. We can have corrective bounces, yes. In euro dollar, for instance, if the rest of the dollars are a little bit weaker, but again, the news, the comments, the situation in Europe is not such to give me a lot of confidence in euro for the time being. And sterling, as I said yesterday as well, absolutely no clue for the time being, although I have the impression that we are in a sell the rumor by the fact kind of situation on the whole political scene story. But for the time being, I'm not sure whether a Boris Johnson replacement person is going to be more positive for the sterling or not. Besides taking away some uncertainty of his resignation, of course. But I'm reluctant to buy sterling because of this, to be honest.
Yeah, do you want to take over the charts and go through your bits and pieces you've gone through?
Sure. I have a couple of things that I'm my usual stuff that I'm watching.
Okay. Yours.
Yeah. Okay, here we go. So we are seeing this is the one that I'm showing every day. Did those lows yesterday on the euro dollar, and now we are trying to climb back up a little bit, and we're seeing the euro dollar and euro pairs also being a bit better bid. This is still driver correlation algos will still be firmly plugged into this one, I think. But globally speaking, if we forget about this one for a little while, as I'm saying, to me, euro dollar, I still can't buy it. It's something that I need to go on a bit tighter, a smaller time frame. Yeah, I haven't updated it really, but I'm looking to sell rips still in the euro. The first level should be around this 102.35.40. Then we have another one here, 50, so-called the 102.30.50 zone. Will already be a little bit of a nut to crack, in my opinion. Never say never, but at least. And I also think that people, a lot of people will have missed this drop because it came a little bit out of nowhere on Tuesday morning, all of a sudden dropping 150 points in very short order. I think a lot of people will still have missed this, and if we ever get back there, I mean, unless something really dramatically changes to the dollar situation, I expect to see sellers up there. But let's move over to the ones that I'm usually keeping an eye on. In the emerging markets space, this one has been an interesting one. A while ago, I was talking about this crossroads at 2080, and then this double retracement and fib level. And yesterday, dollar mix went just up to the second one and stopped. So it broke out of this channel, but by the time we closed and we reopened this morning, we are back inside this channel. So this could be a pretty cool failure setting up here. People know I'm still relatively positive on the Mexican peso as a whole, for as long as the global economy doesn't collapse. So this one is interesting. And then for the one that I'm in, we have been trying here a couple of times now to break through this short-term support line. If break we get again later in the day, I'm going probably try to accompany it. Actually, I've put in not on the first attempt, but I always like to wait for the second attempt or a confirmation to see if this gets broken at one stage in the day, and try to accompany it perhaps for a move back into the mid to low 2080s initially, add a bit to my existing shorts. I'm especially versus euro, as I'm not a euro bull at all for now, and and it's also the biggest carry, positive carry that we can have being short euro mix, apart from the yen, but the yen is a bit volatile for the time being. The rand is a different story. The rand is a different story altogether. We've broken through that 1635.40 zone, and we haven't looked back since. I may have missed it, but I haven't seen any real data to confirm or the reason why this break has been relatively violent, other than people must have been wrongly positioned and went for the exit once we broke above this 40-50 zone. I do think we may be running into it's a bit wide. It's like a 1.5% wide, but in above 1700. It's gonna need some really strong dollar, I think, to justify a move beyond those two levels, 1705.10 and then 1735-ish. But for the time being, I have nothing running. If ever this would start to come back below 35.40, I think it could be party over for a while and have a look back to at least the middle of the range, even possibly a retest lower. But open mind on this one for now. Another one, and we've been talking already about, is the Aussie. So the Aussie has found support on this. Okay, I need to go back even. Oh no, here it is. Has found support on the 50% retracement of the 2020-2021 move. I've been long and jobbing off this level a little bit, and then waiting to see if we could break this first resistance 25.32-ish on the trend line, I think. Yeah, this is the one. So I've been jobbing it from the long side, still long, and I've added a little bit on the break here. I'm not going to get married to the position, but it seems that we have a possibility to get back to 68, 70, 75, even 69, and then reassess what's going on, especially if the Chinese news would get some more confirmation or a bit wider audience, that could really underpin the Aussie for a little while. It's a real decent level, this 67, call it 55, 60 zone, and it's been holding really well for now. So that's a really nice market to trade off.
Would you reverse a break in that one?
Say again?
Would you reverse a break of that one?
Depending on what's going on the dollar and perhaps the commodity sphere, I might think of it, because the next. Sorry.
Not to put you on the spot, it just looks.
No. But I might think about it, but then perhaps for a big figure, because there's still some traffic going on here in the 66.75 that I've marked. But it could be that we are on our way then to 64s if this really gives way. It could be. I haven't really thought about a reversal in that one, because I think if I'm really long dollars, I have another couple of currencies that I would rather play, unless the commodity sphere really collapses, and will go paired with very bad economic data, in my opinion.
Yeah.
So moving on to the traditionals, gold broke. As I said, there was a risk. I didn't feel really well about it. Yesterday, I gave it a try around this 1760 level, which I thought was decent enough, but only with a very tight stop. And once it started to go below, I was out. So it cost me about $6. That's fair enough for a risk. Very small risk, small position, just trying to catch a knife. If it would have gone back above 1775-ish, I may have added a bit, for a retest up into the 1800s, but since it didn't, I just prefer to step out. I've got another level around the 1720s. I'm a little skeptical still about what's going on here. But if we start to go back above 1760, 1770, 75, it might be constructive for a move back into the 1800s, in my opinion. The other one where I really missed it because I put my take profit 10 cents too low at 1880, and the low was 1890, and now we are gradually starting to edge higher again. But silver has had a little push in its back as well from those PMIs, in my opinion. Because if you show better economic conditions, stuff like silver, which is an industrial metal, could, although it's services, of course, non-manufacturing, but still, I think it had it halted the slide. We had like the immediate dollar reaction. We went back down to 1910-ish, if I recall well. But then it started to move higher again. So I'm going to be a bit. I might already start to buy a move back just below 1920 and then load up more around this 1880, 1870 and see if this channel holds. Okay, so Anne, I see a question from Anne that copper is strong today. It seems that there's we were on pretty strong levels yesterday. I think Blake showed that in face as well, pretty strong levels. And also, yes, this morning's inventory data came out, lower inventories, which is also helping to underpin copper a little bit, and then give and take probably a few stretched positions, I would say. But yeah, it's a fair bit higher this morning. We're back above 350, right? Yeah. Okay, another one. Yeah, the EuroCAD. Don't change a winning team right here and now.
Don't talk to me about that one.
Yeah, close your ears. Don't listen to me. It's still in the clean break zone. Yesterday we had a blip, and it really looks like to have been a fixing blip. That one. I even missed the blip in EuroCAD yesterday, but it moved back up to let me put it on a slower on this one, and that is really between, yeah, exactly. This is this is GMT, so it's the 3 to 4 p.m. move in London, which is probably probably we hit the top on the bloody fixing. But yeah, otherwise, even in the short term now, we can probably do something like this, or if you want to, if you want to have a wider look, but then we are back at 134. So no, this one I don't like. So yeah, the break is still on. The overall, I think we are we still have a decent chance to that, providing we stay below 134, of course. That we may be on our way to 130 in this one, especially that I have extremely limited confidence in the euro. We also saw a decent rejection of the dollar Canada yesterday. People were calling some fibs in the high 130s and some targets, and we saw a decent rejection up there as well. So despite the oil drop, as soon as oil stabilizes, Canada is still behaving well, in my opinion. We do have Bank of Canada coming up next week, so and it is also going to show us the new economic projections. Yesterday and the day before, there were some rumors coming out that the Bank of Canada could really keep keep pressing with high yield hikes, rate hikes. So the one thing that we always have to be careful when we trade stuff is we have to know when to be very cautious. So now that the market is expecting the Bank of Canada to continue to hike aggressively, now that the market is seeing that the Canada is doing pretty well, even though oil was coming off and nat gas was coming off, we have to be careful into the Bank of Canada next week, and we will talk about that. But there's a risk building for disappointment, in my opinion. So if Canada really strengthens into the Bank of Canada, I will for sure take off any of Canada loans that I will be carrying then. And that's it for me, Ryan. I've spoken enough.
Yeah, no worries, mate. Yeah, I'm laughing at EuroCAD because I was in the short with this one as well, and I had some overnight TPs that I put in Tuesday night that didn't get triggered. I only took one off, so I cut some of my trade, and then my overnight TP hit yesterday at 32.50 just as it made that low. Let's get the old screen share up quickly. So I hit my overnight TP on a portion here down at 32.50. I thought, well, great, okay, fine. I got a bit lucky with that one because it was 3 pips off the low. And then I moved my stop down to 133.30 and got stopped in this move, and it got to 131.8. 31.8. So on one side, I made a bit of money on the TP, but then I got triggered on a stop by nearly just under 2 pips, and then it collapsed all the way back down again. So the life of a trader, and that's the FX gods for you. You know, you pay your money, you make your choice. ADP, quickly, done a bit of digging. ADP is not today. They paused it 30th of June. They're going to relaunch it in August, probably because they make an absolute hash of these numbers. Usually, they've stopped the Canadian ADP that they were running a couple of months ago, which was really a great number. Absolutely amazing number. It would come out up 200k, and in the next month it might come up. It might go up down 500k, and they'll revise the prior one to up 1 million or something. It really was a bonkers number. So they paused that, but ADP is not today. They've paused that as well. So that's about it for today. I was just about to say that's about it for this week, but it's not Friday yet. That's about it for today. I just nicked into a long euro sterling while Kay was talking at 84.99 as we're into that zone that I highlighted earlier and had on my charts for a while. So I'm going to play this one as a bit of a short-term trade. I'll trade it down to 80, and I've got a current stop at 84.70. So we'll see how that goes. If it doesn't work, so be it. But if it plays ball, then I'll see where it goes on the upside. As always, thank you very much for coming to the show. Good luck with your trading today. Stay safe, and we shall see you tomorrow.
Thank you, everybody. Have a good day.